Small employers are not looking for someone to give them health insurance quotes. They're looking for a consultant that can guide them to the right strategies and products that will help them recruit and retain employees. The problem is that we are still quoting health insurance like it's 2005. What do I mean by that? When I was a broker in the early 2000s, quoting small group plans had different requirements because of underwriting. Health insurers had ranges that they could vary costs within on an employer-by-employer basis according to each small employer group's health risk profile. We had 3 categories that a group could fall within. In the fewest cases, a group would be in either the minimum or maximum rate category. They could be a minimum rated group, meaning their costs would be the lowest because their health risk to an insurer was also low. These groups often had the luxury of selecting the most attractive products because those products were easier for these groups to afford. They could be a maximum rated group, meaning their costs would be higher because of the financial risk they presented to an insurer. As a result, they would often be shopping from the cheapest set of options in the market. Or, in most cases, they would be a group that was within those minimum and maximum rate ranges. For these groups, a big part of the experience of quoting was to get feedback from their health insurance broker as to which insurers will rate them the most favorably. In fact, we sometimes referred to brokers as field underwriters for just this reason. This was important because the process of applying to each carrier in order to get final underwritten rates was tedious, requiring lots of time and paperwork, and so applying to each carrier wasn't always feasible. Because this is how the market operated, quotes were really just an estimate. Brokers would often present those estimates on a spreadsheet just like this. I pulled this from an old file. This is a sample proposal that we used in the early 2000s to communicate quotes to an employer. You can see that each product has 2 prices representing the minimum and maximum ranges of the insurer's cost for each of the products. We'd usually tell the employer that their actual cost would fall somewhere between these 2 numbers after underwriting. The insurers that made their way to the spreadsheet were those that we felt would offer the best rates and products for this particular employer's needs. But that was 2005, and the market has changed. Following the Affordable Care Act, small group health insurance products were priced according to a community rating standard. This means that health insurance premiums for small groups are no longer based on the group's unique health profile, and therefore health insurance brokers really aren't offering quotes. Instead, it's just prices. Because of this, the old spreadsheet method of quoting in preparation for underwriting no longer makes sense. Because it's just prices, employers want to know that every option has been considered. A limited spreadsheet with just a few choices creates uncertainty in the employer's mind because they are afraid that something is being missed. There is just no reason not to show every employer every plan every time. But to do that, you need a new tool, something that allows you to boil the ocean in a way that is intuitive, easy, informative, and therefore confidence building. BenefitSculptor supports level funding too. Simply create your level funded option and add it to the market comparison to see whether that option is right for your client. Brokers will have 2 major points of success from using this tool. First, you will eliminate the quoting relationship with your employer clients. Employers will stop associating you with a particular set of products and instead see you as the go-to industry expert they rely on for the entire market. Second, the employers will have a greater understanding of the decisions they are making. They will make those decisions faster and with more confidence in you.